Who can blame people for talking about Bitcoin? Even Elon Musk and Warren Buffett have weighed in on the conversation about cryptocurrency, especially as Bitcoin's seen significant increases in value. Just think tens of thousands of dollars, not just dollars and cents. Bitcoin certainly has a future, and it can create an impact on the future of currency worldwide. So, in this video, I'm weighing in on the conversation about Bitcoin with my own opinions. I'm not buying it, and here's why. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. I'd be surprised if you hadn't heard of Bitcoin or have a hint at what it is. But if you haven't, I'll give you a brief rundown. Created by the enigmatic Satoshi Nakamoto in 2009, Bitcoin is a form of cryptocurrency, or a digital asset designed to work like money without physical paper money, with the goal of being a trustless currency. When I say trustless, I'm really saying that Bitcoin doesn't rely on mutual trust between two parties to each hold up their end of the deal or exchange. Our cryptographic system does that for them, not like selling and buying on eBay, where you have to trust each other to deliver. Bitcoin is the first major implementation of Wei Day's idea of digital currencies in 1998. Initially, the idea was to create a currency built on the rules of cryptography to control transactions and the creation of the currency itself. This removed the central power from having control over the currency like a government or a bank. You can get into a whole mess about Bitcoin origins, systems, coding, and so on. It can be incredibly confusing or hard to understand even. But you know what isn't confusing or hard? Hitting that like and subscribe button, especially if you enjoy the content on this channel. I believe I have a sort of ground level idea of what Bitcoin is, but instead of me trying to explain it, I've linked a video in the top right that goes fairly in depth about how Bitcoin works. But for our sanity and the purpose of this video, let's just summarize Bitcoin as a digital currency held in a digital wallet that can be sent to and from various wallets over the interwebs. This might be simplistic, but we're gonna roll with it. I also would like to make it very clear that I am very excited about the future of Bitcoin. I hope and believe that it will start to get integrated more and more into our everyday lives as the premier currency of choice. I hope it'll become a standardized global currency you can use in everyday life. If you travel to other currencies, you won't have to worry about foreign exchange rates with Bitcoin, unless your destination is a country that's banned it. However, it's going to be a long time before this globalistic implementation. On top of that, Bitcoin is decentralized. No one can really say they own Bitcoin, meaning no government or organization has authorship over Bitcoin and cannot impose changes or rules to it. It was built that way by Bitcoin's creators who designed the currency to be incredibly versatile. The versatility of Bitcoin's blockchain allows others to create variations called altcoins, like Vitalik Buterin's Ethereum used in NFTs and smart contracts. In essence, smart contracts are codes written on blockchain for exchange of digital currencies where certain prerequisites are met, almost like a vending machine. As an example, Ethereum is the basis for NFTs. For a bit there, NFTs shot up for popularity for digital artists and creators. Jack Dorsey even made millions by taking advantage of the system to sell a tweet. Yes, a tweet. No joke. The artist Beeple, though, became a millionaire through NFTs when he sold his picture for $69.3 million. These are but a few examples of what NFTs and Ethereum built on Bitcoin's blockchain can do. There are more examples of Bitcoin's blockchain versatility than other altcoins. There's Litecoin, which is nearly identical to Bitcoin. Bitcoin Cash is a direct fork of the original with some key differences. Then, of course, the best altcoin there is, Dogecoin, backed by the infamous Elon Musk. Despite all that great cool stuff, I'm not buying Bitcoin, for two reasons: my investing style and something called asset productivity. Let's start with the first, my investing style. Even if you've watched my videos or not before, you need to know that I am not a speculative person. I like the cold hard facts in front of me when I invest in a company. That's why most of the videos on my channel are deep dives into specific companies like Lockheed Martin or Aerios. I look at the financials, a bit of the history, and what the company is up to. For me, this is the best way to invest long term. I'm on the risk-averse side. I won't buy up hot stocks like Tesla, Palantir, or Plug Power. For the most part, I don't think these companies make much sense, have questionable business models, or are just so poorly run it's a shock they aren't bankrupt yet. Disclaimer, I'm not talking about anyone who's chosen to invest in these or similar companies. No, I just don't care if you think Lucid Motors is developing a car or if Virgin Galactic will ever make money, which neither of them have done yet. You do you. It's just I'm not willing to speculate on future performance of products, especially when my goal is to just buy a good company that will outperform the market and generate enough returns to retire. Why even bother mentioning all that? Well, it's because Bitcoin is a purely speculative asset, and I don't speculate when investing for the most part. We can argue that mass adoption on a global scale of Bitcoin is becoming more mainstream and desirable. Look at Tesla, MicroStrategy, and Square all adding it to their balance sheets. Look at the large banks like JP Morgan, Bank of New York Mellon, and even Goldman Sachs. After Tesla and the others added Bitcoin, so did these other banks, adding a sense of validation to Bitcoin. Just before this, Bitcoin was classified as not an asset class in many cases for these big banks. Yet the greatest potential detriment to Bitcoin is governments. I try not to speculate in investing, but there's always a what if or a worst case scenario that we have to look at. What if governments decide that Bitcoin is too much of a threat to a country's local currency? What if they try and heavily regulate Bitcoin, impose steep taxes? VPNs can only do so much. What if a government tries to create and control its own form of cryptocurrency against Bitcoin? We all better hope not. It's absolutely terrifying to imagine. Big government isn't known for making anything better, despite what politicians and bureaucrats all promise and try and sell you. In fact, it's already happening in China with its very own CDBC, or central bank digital currency, a digital yuan. It's been reported that 86% of central banks are looking at similar models of CBDCs. It might just be a matter of time before even the US gets involved with the digital US dollar. The implications of this, the conversation around the invasion of privacy and the right to privacy, the invasive overreach of governments, and that other world governments are potentially creating their own cryptocurrencies is terrifying. Bitcoin is an amazing creation that can decentralize the world's current financial systems. There are incredibly powerful people that aren't willing to give up control over money. Government, organization, company, whatever. We're not pointing fingers at any one group here. To create their own cryptocurrency which they can fully control and further monitor their populations is no doubt tantalizing. They'll justify this overreach with a security against threats and or terrorism and or insert here argument, I'm sure. I just think that we're coming to a great divide and that either we as a society will either choose this decentralized way forward or each nation will further drive division by creating its own cryptocurrency. I personally hope we go the route of the decentralized force and abandon this attempted overreach of governments. But these and others really are conversations for another day. I'll turn off speculation mode and get into my second reason for my aversion to Bitcoin: asset productivity. Essentially, Bitcoin is a non-productive asset. I'm not saying that it's not an asset class or that I don't think it has any value. I'm merely saying that it's not intrinsically valuable. There's nothing about Bitcoin itself that provides actual value similar to gold and silver. Some of you may recognize this as a take popularized by Warren Buffett. While I do agree with him to an extent, we'll change his analogy of a farm while talking Bitcoin. Instead, let's use the analogy of Apple. If I buy a share of Apple and it makes an iPhone for $60 before selling that same iPhone for $100, then it's safe to say that Apple has now just profited $40. Apple now has to pay its other expenses and deducts this amount, leaving it with just $5. Now, since I own a share of Apple, it either has to pay me dividends or use this remaining money to grow its business further. This is optimal. I provide capital to a business, the business provides a product or service and sells it, and then I get a portion of the profit from that product or service selling. That's just not how it works with Bitcoin. If I buy Bitcoin, the only way I make money from it is if someone comes along and buys it at a higher price than me. The incentive to buy it is gone because the price gets higher and higher. I'm not suggesting that Bitcoin is in a bubble or it's bad, I just don't think it's any different from Forex or foreign exchange trading. Forex is essentially the process of buying a currency with the intent of converting it to your home currency once its value is higher than your home currency. You make a profit from the changing exchange rates, similar to Bitcoin. Once the Bitcoin you've bought exceeds the value you bought it for, you can sell it for a profit, then exchange it back to your home currency. The only things that even give your home currency any value are the governments that back it. That's not to say that I wouldn't invest in companies that provide the backbone for assets like Bitcoin or gold. For example, one day I want to invest in Coinbase, which is now one of the major exchanges for cryptocurrencies, or in the ETF GDX, which holds some of the top metal and gold mining companies in the world. What I'm thinking is rather than owning a non-productive asset like Bitcoin or gold, own a piece of a company or ETF that will provide a return value on those non-productive assets. While Bitcoin is a versatile and novel cryptocurrency with the potential to change how we do money around the world and decentralize the control of money away from governments, in its itself, Bitcoin holds no intrinsic value, much like gold. I personally won't invest in buying up loads of Bitcoins. Bitcoin is speculative, it's a non-productive asset, and I'm not a speculative investor by any means. But at the end of the day, that's just my 2 cents on the conversation around Bitcoin. There will come a day when I might change my mind, but until then, I'll watch what happens next with the future of Bitcoin. Leave a comment below with your thoughts on cryptocurrency, or if you want to have the conversation about Bitcoin and cryptocurrency, consider joining my Discord. Thanks for watching this video. I hope to see all of you in the next episode of Dollars and Cents.